Hello guys, welcome to the pre-market analysis. So if you see the second consecutive day, Nifty have showcased a tug of war between the buyers and sellers and now trading like indecisive kind of situation at this level and closed with slight negative bias. And if you look at the sectors like FMCG, auto and Reliance, actually dragged the index, but metal stocks provided support. And if you see the China's announcement of adopting an appropriately loose monetary policy for 2025, again positively influence the global market. If you see, when we talk about loose monetary policy, that will pump liquidity. Monetary policies are of two types: loose monetary policy and tight monetary policy. Tight monetary policy is where when you keep the interest rates higher, loose monetary policy, interest rates lower. So when you have a lower interest rate, that will help you to borrow more money, and that will create demand in the market, and that will eventually lead to more production, and it will improve the growth. Over a period of time, inflation will come because of this excessive demand, but it is a stimulus for the market. It will pump liquidity in the market, and that's very good for the stock market. And because of that itself, you can see yesterday metals and some European stocks are also doing really good. So in fact, if you look at this policy, it resembles their 2009 strategy during the global financial crisis, indicating ultra low interest rates and heighten the demand situation. Whenever the interest rate is very less, it will increase the demand. And why it is good for stock market is because they will take money at a lower interest and they can invest in other developing countries also. Okay, now coming to FMCG and auto sectors, which are under pressure. See, a significant drop of 10% in one consumer product stock actually triggered a 2% decline across the sector. Right, autos also not far behind with if you see year-on-year sales of passenger and commercial vehicles showing a dip in November, but two-wheelers avoided the downturn. So the Federation of Automobile Dealers Association (FADA) highlighted these challenges that actually further fueled the market negatively. Let's look at the institutional activity also and the derivative insights. See, institutional data reveal a contrasting behavior. FIIs were net buyers with 720 crore, and DIIs, if you see, they sold 1650. Remember yesterday, it's like when we were talking about yesterday, FIIs were selling for 800 crore, DIIs bought for 1600. Now today it's exact reverse. Whatever FIIs sold, now they bought. Whatever DIIs bought, now they sold. So again, if you look at the futures trend, FIIs maintained a 55% short position, while proprietary traders increased shorts from 67% to 70%. And what is interesting is in options trading, FIIs showed a neutral stance with a slight negative bias, while the retail traders exhibited bullish behavior by buying call options. And that's exactly what you see. So that's a rare shift from their usual performance, that we have, seen so far for selling options. Okay, now let's look at the global market development. See, globally also, if you see, the US market witnessed profit booking ahead of crucial consumer price index data, which is due on Wednesday, and Dow Jones fell by 0.5%, 0.54%, and S&P 500 and Nasdaq posted moderate and modest gains. But volatility is increasing. That is because of this expected data, which is on Wednesday. So obviously, VIX will be, going higher, and VIX is over around 10%, which is again showing that volatility, right? And if you look at the ADRs are showing mixed result. IT stocks are doing good, positive, and supported by HSBC's upgrade of Infosys, Wipro, L&T, and and downgrade. If you see, TCS is downgraded, Tech Mahindra, and Coforge. So these ratings, if you see, are likely to positively influence Nifty today, with Infosys and Wipro having some more substantial impact it can make on Nifty. Now coming to crude oil and the Reliance, see, crude oil prices saw slight recovery after China's announcement. Okay, Brent crude traded at around 72 per barrel, and WTI it's around 68 per barrel. But Reliance faced headwinds due to the weaker Singapore gross refining margins (GRM). November GRM averaged around 5 per barrel. That's an improvement from October 4. But reports of recent drops have created uncertainty. Reliance remains under, threat or under watch because of its price action, which is closely aligns with Singapore GRM trends. Now, what are the key data releases to watch? Early morning, China's trade balance data is expected. While during the market hours, if you see Germany's consumer inflation data is due at around 12:30 p.m. And post-market, the US Energy Information Administration short-term energy outlook and the 3-year, not auction will again garner attention. So these global economic indicators can influence the market sentiment and directions throughout the session. Now, coming to the technical analysis of Nifty and Bank Nifty, I'll quickly go through that. Nifty basically traded within a very narrow range of 24,500 and 24,700 yesterday and closed at around 24,600. 24,690 level it was closing yesterday. So again, it formed a small bearish doji-like candlestick signaling indecision. And the key resistance level, if you see, that remains at 24,700, where significant open interest is there, 24,800, which is a 50% Fibonacci retracement also. And the psychological barrier of 25,000 is again there. So immediate support, if you see, that's 24,500 again, where good open interest is there, and 24,200. And if you look at Bank Nifty, it closed below 53,500 after a minus, small profit booking session yesterday. But the index remained above key moving averages, of course, and bearish reversal patterns signal caution at this point of time. There is a signal that it can turn bearish. Now, if you look at the support levels are at 53,250 and then 53,000. Let's look at the option data. See, from the option chain, if you look at it, Nifty's highest call open interest is at 25,500. We also discussed this yesterday with maximum writing at around 24,700. On the put side, significant open interest is at 24,500 and 24,000. That indicates strong support. So it could be 24,500 to 25,000, or a broader range could be 24,000 to 25,000. So this data basically suggests a likely trading range between 24,000 and 25,000, a broader range 24,200 to 24,800, a small range if you consider. So for Bank Nifty, the immediate resistance is around 53,570 level, with the supports are at around 53,300 and 53,000. So guys, the global cues and institutional activity provide a mixed outlook. The rating upgrades for Infosys and Wipro again can lift the market sentiment today. So there can be a gap up opening. So keep an eye on key technical levels and also the global data releases, and based on that, you plan your trades. So technical is again very important that you need to watch during the market hours. So that's about this session. Thank you so much for joining. See you in the next video.